Good Saturday afternoon. This is the weekend members video. Um, I'll go over the market as quickly as I possibly can, and then go through the list. I'm not gonna go through all of them. There's 128 stocks that I'm sending you. I'm gonna go through maybe the top, like I'll say 20, 30 at the most, for to make this video, less than half an hour if possible. I know I ramble on sometimes. So real quick here, the market. Um, great run we've had last couple days. We're in a squeeze. We went from a negative to positive. We're kind of churning up high. The momentum is picking up. We are hitting this upper channel level. If you look at it here, that 4,300 level seems to be something we want to reach. Maybe we reach it on 43. Let me see here. Yeah, 43, 11, 69. That's that 61.8 retracement from the top, from the bottom. So we might reach that 43.11 on Monday, which is another 30, 20, 30 points. And then from there, most likely stall into turnaround Tuesday. That's kind of what I'm looking at. We might even, turn around a little bit before that on Monday afternoon or so. I'm not sure. We are in a squeeze. We are in a green dot, like ready to go. I'm ready to go kind of thing. As we were here, we kind of pulled back a little bit, and this is ready to go, and looks like it wants to fire to the long side. But we'll see. We'll see. We had some here that we kind of like wanted to fire, and then we did went a little higher, then we pulled back a little bit. We are at extremes. The market it's currently at 3 sigma. Um, if you know what 3 sigma is, just look it up in Google. 3 sigma. It's basically the highest, the less than 1%, less than 1% probability of it reaching, and that's where we're at as far as statistical probabilities of extremes. We are definitely there. Um, we're super extended from the 8, way from the 21, and obviously from the 50. So obviously, it's understood we are extended. If you look at let me give you a quickly the 30-minute. Let me look at my ATRs here so you can kind of. If you look at the color channels, we're definitely on a daily. We haven't reached the daily here on. Let me put the SPY so maybe a little bit less cluttery. There you go. I have less notations on the SPY. If you notice, obviously, we have the same kind of scenario here. If you notice, this is the daily, guys. Okay. If you notice here, when we kind of go to that 3 ATR level, we fall back down again on the daily. It's hard to reach that 3 ATR level on the daily. We should reach the 2.5, and then we fall back down again. Kind of looking at all the instances here when we kind of rode it a little bit. So the first time we hit it was at 413. It went to 431. So that was an extra 20 points higher. That's basically almost 200 points in the S&P. That was back in August when we had that little rally. But then what happened? We kind of basically gave it all back and then some. We went from hitting it the first time in the 413 level to 431. We gave it back to the 413 level. We went back down to 391, headed back up to 411, on all the way down to 348. So these things happen. These things happen. So we're back here again. We go sideways for a little bit, and then we kind of 401 back to 393, 17, 409, and then boom, we came back down to 378. 377 range. We came back down up again. It went as high as 416 to within a month, come back down to 382. Okay, and then from that 382, we ran all the way back up to 415, came back down to 403, and then we've been in the sideways range, and we kind of up now to like that 429. We might hit that 430. And what do you guys think are going to be the odds that we go from 430 to 450, or we go from 430 to 431 to maybe back down to like 415, 417? Just putting it out there. Now, we also have a gap to fill. If you notice, The high for Thursday was again the SPY, which is equivalent to the S&P. The high was 422.92, and then the low here is 423 and change. So there's a gap to fill here. So from 430 to fill this gap, you got to go back down to 422. So we're looking at about 50, 60 points lower on the S&P to fill that gap. Now, this right here also is the gap fill. Back in August, this is something I want to show you guys. Back in August 17th, around there, August 19th, if you notice, there was a gap here. From August 19 to August 22, there was a gap down, right? This gap down, guys, has never been filled until this last week, because we went as high as 419, and the gap fill needed to be filled at 421.18. Well, let me see, what's the low this day? 421.22. So 421.22 officially fills the gap, right? Somewhere around there. Look all these months from August. We had all these months. Not even in February, we had this little high 3 ATR. We never even got there until Tuesday, which was the first day coming back. We filled that gap on May 30th, guys. From August 19th to May 30th, we finally filled that gap. So all this was the gap fill. Now we have this little gap here, which I'm pretty safe to assume it's going to get filled sometime this week coming up, when we kind of go back down. Even coming back down to the mean here of 416. I'm a big mean reversion trader, as you know. I preach probabilities, I preach the math, statistics. When you're at a 3 sigma, 3 ATR, the chances are that you have a 95%, 97% chance that you're going to revert back to the mean. And the mean right now it's about 416, 415. So you're looking at a 30, 40 point drop. Not huge. It's a normal correction, but that makes me a lot of money, because if I'm selling 435s, 432s around here, and we go back down to even 420, that's 150 points on the S&P. That's 15. That's about 15 points on my XSPs. I can go from 110 to like 20 cents in a hurry. You got 100 contracts, do the math. So that's basically how I trade. I'm a mean reversion trader for premium selling on the XSP, and I'm a squeezed, breakout momentum trend trader on stocks. This is all the only two things that I do. So this is where we're at on a daily. If you look at the 30 minute, we are way, and here's the gap that we need to fill right here. Okay, this is back on Friday. We are way, even back here when we hit it on Thursday, we kind of went sideways for a little bit, came back down a little bit to the 1 ATR, and then boom, we took off, and then we've been riding this 3 ATR even back here on last week. And then what happens, we go to 421 to 416. We go again, this is a 30 minutes, so it's like a lot quicker, a lot less movement, but it's the same concept. You go from an extreme to median, to another bottom extreme, median, an extreme, almost median, extreme. Now, what are the odds that we're going to get at least a 425 on the 30 minute? If you look at the hourly, kind of the same thing. You go from, back here, this extreme 3 ATR, when we first hit it, 417, and then we got 420. We got an extra 3 points rally out of it before we kind of came back down again from 420 all the way down to 410. That's 100 points on the S&P. And then that was last week. We came back up. We come back up again when we hit it here, 419 to a high of 422, an extra 3 points. We come back to the -1, and then we go back to the 2, and then boom, take off again, and we take off high. We take off strong here. And if you notice, these are thrust momentum bars, and we have the squeeze firing. We got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We have 12 bars of fired squeeze on the 1 hour. The norm is about 8 to 10. So we're definitely extending. If you notice, the very first, again, this is in the pro version. I got my very first slowing down momentum bar. If you notice, the bars are getting smaller, tighter, just like we're getting smaller, tighter here, and then eventually, poof, we dove off. We get smaller, smaller, poof, take off, smaller, smaller, we take off. Now, smaller, smaller. I don't think we're going to take off. I think we're going to come back to the mean here, and this scenario will be like a 422, a 4220, a 4220 S&P, which were 4282. So you're looking at 60 points, sometime in the next, by Tuesday, Wednesday. So that's kind of what I'm looking at the overall market. Okay. Hope that makes sense to you guys. Okay, now that's the market. I'm going to move on to stocks real quick. So the list that I gave you guys, it's 125 stocks. These are the flag stocks from last week, and then ones from my overall scan, from my overall scans that I did this morning, and then I went through every single one of them and I flagged the ones that were quickly setting up. So I'm gonna go through them as quickly as possible. Okay. So if you could tell here where I'm putting my alerts on little flat tops and little reversals and so forth. So I'm gonna go through them. If you wanna pause the video and kind of like do your own markings on your chart, um, I would advise you to do so. Okay. So here we go. Got that one, and then also the ones that are red. That means they're already got activated and they're already actually hit. So this is from last week. We had a 57.89 a trend line. We broke it last week, and then boom, we took off from there. So if you would have bought this breakout at 58, you're already at 60. You would have probably hit 61 and taken some money out. So I have another one coming in right here that I put in today. So again, these things work, guys. You got to put the work in. Okay, you got to go through it. You got to put the work in the weekend. After the market closes, put in your trend lines, see where they're at. Here's the breakout. You make some money. You take your profits and you do it again and again and again and again and again. It's very simple. This is it's like a double top. A double bottom. So that was it, and then that worked. That was the pivot, and there it is. So I gave you guys this. Here we go with the next one. This is my trend line right there. Here's a nice one that would have been taken way back here. So now this one right here got hit. If you notice, I had the trend line right there, and boom, you were up 2 points on Friday on that trend line break. So I gave you guys all these. These are all the ones that I gave you last week. I'm not gonna say it again. Sorry about that. But this is, if you see a red dotted line, that means that the trend line was already there and it triggered and activated. A black trend line, it's a brand new one that I just drew. Okay, a black one is a brand new one I just drew. A red one is one that I had drawn and it already activated. Here's the black one. Here's the one for this week. Here's the one for last week that it would have made you money. Okay, so I'm not gonna go through that again. So the next one, that would have made you money. Lennar, boom, that would have made you money. This is the one that I have on for this week. Right there. Right there. That activated, you probably flat on the day. Nothing to write home about, but hey, your stop is the 8. That's right there. Right there. Boom, this one got activated on Friday. Just a little, poke his head above it, and it kind of just stood there. So you're kind of like on this trade, and then you had your 21 be your stop if you're in this trade. I got 2 on this one. I got this one and I got this one. That one's still there. That one, oof, that would have been nice right there. Boom. That would have made you really nice money at 74.20 or 76.38. That would have been 4 points in 2 days, guys. I'm giving you money here. I'm giving you just giving you pearls. Giving you a lot of wisdom here. A lot of money making opportunities. We got a little flat top on top there, right there. This one, I don't want to draw it too steep, but actually I'm seeing this right here. So I'm actually going to go ahead and do a new one. right there. I like that one right there. So I got this one on the top side. If it breaks this one, we can kind of like have a little breakout, a little early cheat entry on that one. Right there. Boom. That would have been a nice winner. See, okay, here's how you treat these guys, right? We had this one from last week. It poked his head above it on Wednesday, right? Wednesday, no, sorry, this is Tuesday, Wednesday, Thursday, Friday. So it poked his head above on Tuesday, and then he came back inside on the next day. So it kind of like it came back, right? But it never violated that eight. So I would look at the stock itself, see how the character of the stock is. Because if you notice, like let's say you would have, way back here, you would have had this one, you would have taken it right there, right? Look at that. It came back down to the eight, right? And even on this day where it broke it, it closed, it came back at the end of the day and it broke and it closed above it. Do you guys see that? Right? And then here it held it again. Then until this day, until that day right there, that it closed and it closed below it, this did the stock not break down. And then if you notice from there, it never kind of came back inside until over here, and then so like look at the character of the stock, right? So in this scenario, you take this entry right there at let's say 38, right? You take it at 38, and then it comes back inside to like 37, I don't know, 50 or whatever. But it never violates that eight, right? So you stick with it, and then you get majorly rewarded the next 2 days in a row, from 38 to 41. Okay? Be a trader. Be a trader. Put the work in. Excuse me. Here we go. Look at the trend line I given you guys last week. There it is. Boom. That never got you out. And look, it's holding the eight real nice. You never would have gotten stopped out. You still hold this from 429 to 458. And you even had a high of, somewhere right here about 460. So that would have been, a nice 20-point move on this little flat top right there. Waiting for that breakout. Flat top right there. Boom. See this one? That one would have stopped you out and you would have had a little loss. So there you go. They're not all winners, but your stops are small and your winners are big. And in this particular case, you even have a nice winning percentage. Here we go. So this is the trend line from last week, right? You would have taken it here and you would have held it, and the next day it definitely would have gotten you out because it even broke the eight and it even closed below the 21. So you got stopped out. You would have bought it, let's say, at 109, and it stopped you out at 106, let's say. So you lost 3 points in that. You have 200 shares, you lost $600. Okay, and then the next day comes back in again, and it comes back in above that trend line again at 109, and you're at 113. So now you're up $800. Net, you're up $200. I mean, come on. Here we go. Right there. Winner, winner. Chicken dinner. Another winner. This is my trend line right there. If you had this right here would have been nice. Boom. Then I'm playing for this again. Even this right here would have been a nice one right there. 392. You're 449. Right there. I gave you guys this last week. It's right in that eight, real nice. You would have taken it right here somewhere around 40, 48. Let's say you're 50. Right there. Gave you this trend line last week. Boom. That would have definitely stopped you out. I would have been stopped out. No doubt. No doubt I would have been stopped out. So you would have a little small loser right here. But then what happens 2 days later? It comes back inside. You're back in it, and boom, you got a winner. You can't quit on these stocks. Right here, boom. That would have been the entry. It never got you out. And this is now building another little base right here. I'm actually going to put an alert on this one as well because I like this little base right there. At 43.25, 43.26, you can get a nice little run, little couple handle. Here's my trend line. Trend line. This one activated. So, if you were taking this, you're in the stock right now, and I would say the 21 would be your line in the sand. And then these stocks that are showing these kind of characters that they're kind of breaking out, and that they're showing you the breakout. Um, you know, can test them on your platform against a squeeze, and if they happen to have a squeeze as well, oh man, pour the kitchen sink on these because you can go a little heavier because you have a momentum on your side. There's a squeeze. There's the trend line on that one. Just going through it real quick. I actually like this as well here. Let me, let me take this out. Yeah, I'm gonna put an alert here because I like this bottom cheat area because this little mini little cup here, if it breaks out at 92, I could be a buyer from 92 to 100. I make my 8 points there, and then if it breaks above the 185, 101, then I get add on. But I already got an 8 point winner. And then where's my stop? My stop is if it comes back inside the 50 and it breaks it down, then you got a dollar risk to make 8. Look at this. This was nice, right? You would have bought it right there. 110, 120. You would have bought it, let's say, at 120. You're almost out. You're almost at 130 right there. That one was a winner right there. Boom. This is like this is simple, guys. Very simple. So this is my trend line right there. Hope you guys are actually doing this. I mean, you actually like this is not just like in vain that I'm going through this for you guys, and then it's like, okay, whatever. Like, I hope you guys are actually making money with this because, like, I mean, like, I want you guys to make money. I want you guys to like, see something like this. Um, Let me see, what was it? See something like this. Okay, you put the trend line there. Okay, I got the alert. The trend line broke. Let me get in at 81. Let's say you're 84. Okay, I have a little thing right here. Boom, right there. See, the next day when it broke, it kind of came back inside, but see, the 21 held, the 21 held, the 21 held. It closed way above it. So you would have bought it at 60.05, you're at 63.18. Boom. That's my trend line. That one's kind of a little nice little flat base right here. There's my trend line from last week. You're in this trade at 74. You're in it. And 21 is your line in the sand. Right there. There's a trend line break right there at 50.05. You're 52. The 8 will be your first stop. The 21 second stop. There's no reason to make trading difficult or complicated. There it is, right there. It kind of like, can chop around, but look, the eight held. It's holding, it's holding, it's holding. So you're in this trade, the 8 is your friend. Let me actually double check, guys, if it's the 8 or the 10. I keep saying the 8, but I want to make sure that I'm saying the right. The 21. Sorry, it's the 9. The 9 exponential. I have it as the 9 exponential. Okay, so I have the 21. The 21 is the green. Then I have the 9. So that is not the 8. That's the 9. I have the 8 on for the squeeze setup per the man JC. It's 8, 21, 34, 55. The Fibonacci extension. So like between 8 and 21 is the entry, the sweet spot on the fibs. But on this scenario, it seems to be working better than 9. So I'm going to keep the 9. Let's see if I put the 8. If it makes any changes. Still kind of holds it. Kind of gives a little bit. I want to give a little bit more room on this because it's more of a swing trading kind of like setup. So right. So I have the 21 and I have the 9, and then the red is the 50 and the 200. Those are kind of built in. Okay. So yeah, see how it holds it? I like that. It's a little cleaner. All right, so here we go. Trend line. Trend line, trend line. Whoop, nice money maker right there. Trend line broke on Friday. You would have been a buyer at 78. You're almost at 80. Actually, you are at 80. Trend lines right there. Trend line break right there. Trend line. Okay, just gonna go through them real quick. I'm gonna go through like 10 more, and that's it. Because it's basically, see, this one's going sideways. Um, 21 is holding. I had this little flat base here, so it's kind of chopping around. It's basically this. I guarantee it's probably gonna squeeze. This right here is probably gonna squeeze, because it's kind of going around. It's going sideways for a while here. It's got nice earnings estimate. Who would have thunk? Airlines. Look at the growth for the next couple of years. Okay, look at these sales growth and earnings growth. So this is probably consolidating. So I'm gonna probably you could probably stick with this. At the 48 range. If you buy it at 48, maybe your stop is like 46. The 21. Have the 21 be your stop. This can go to 55 with no problem. Give yourself a nice 11-point move on a $50 stock. That's good money. You buy a couple hundred shares, you're looking at 2 grand. This one here, same kind of thing. It's kind of going a nice little tight flag. See this? So I will have 21 as your stop, and I would stick with this until a 21 breaks. There's my trend line. There's a nice money maker right there. Boom. You would have bought it on this break in the 21. You're in this. You would have been up to 80 on Friday. But everything was up on Friday, so not really fair to say. But yeah, you don't care what happens in the market. You just make money. See, look at that. Boom. Look at that. Boom. Right? So look at that. Boom. Look at these right here. Right? This little entry right there. Or let's say you would have had this one right there. Boom. Let's say you would have had this one right there. Boom. Right there. Boom. There's your trend break. You would have bought it at, let's say, 48. Was it 40? No, this is not 48. This is like 42, 44, 46, 48. Yeah, 47. You would have bought it at 47. This is like about 47 area. You're up nicely. All right, a couple more. There it is. This one just hit it. On this one, um, I would probably put the 140 as my stop on this one at 21. We do 2 more. Flat top. This one, nice money maker. The 21 is your stop. Okay. And then nice little flat top here. This could be a nice one. The 21 is your stop. And then this one right here, a little bottom cheat entry. If it breaks above this, that means it's breaking above the 50, and then you use the 50 as your stop. All right, guys. I hope that kind of like there's there aren't that many more, but you get the point. Just go through them, look for that. You know what to look for. Put the work in. There's absolutely no reason why you guys should not be up at least 30% this year. And if you're not up 30% this year, then whatever you're doing is not working. It's just that simple. You gotta be look in the mirror and be honest with yourself. If you're not up 35% this year, 30% this year, whatever it is you're doing, whatever that is, it's not working, because what I've given you and then my setups and my systems that I give you are up over 35% for the year. So it doesn't matter how much money you have. You can have like 10 grand, 20 grand, 30 grand, 100 grand, 300 grand. It doesn't matter. It's the percentage. So, if you buy 20 shares and it goes up 2 points, you're still making that percentage of 2 points. It doesn't matter how much money you make, it's the percentage. So, strive to trade right. Strive to trade correctly, to follow a proven system, and just stick to that system. Don't chase every shiny object. Don't chase every little like news feed, or this guy saying, this guy on Twitter, this guy in the news. All that is BS. Just stick to one thing that it's proven to work, not because I'm doing it. It's because like I'm following people that have laid the groundwork. Mark Minervini, William O'Neill, may he rest in peace. He passed away on the 31st, a couple of days ago. The founder of IBD, How to Make Money in Stocks. The guy that created basically, the foundation of the systems we're doing right now. Benavides, another like disciple of his, and the guy's like a multi-billionaire just because of doing this, just this simple thing. He doesn't do 20 different things. He finds a low cheat area. He finds a little cup, a little base, and he buys here and he makes this money. That's all, as simple as that. That's what he does. You can make money trading. You can make this a very profitable business. It's just you have to like not have fear and not have anxiety and not have guess what's the word I'm looking for? Um, not have a feeling that oh, I can't do it because I don't have XYZ. You can. You put the work in, you study, you watch, the charts and the patterns, and you identify, and hopefully with what I show you I'm teaching you here, you can see it's repetitive. The same. I'm looking at the same thing. It just you don't need 20 million things, 20 million indicators. You just price and volume and a couple moving averages. If you notice, that's all it is. Volume, price, and a couple moving averages. That's all. You could become very wealthy with just price, volume, and a couple moving averages. It doesn't matter what's going on. I mean, it doesn't matter what the debt ceiling is, what the Fed is doing, whatever. It's look at the price. If it's going up, you buy here. If it's going down, you stop out here. Just that simple, guys. Keep it simple. Make a lot of money. Put the work in. It takes about 3 to 6 years to kind of like get your groove down in the market. It's not something you could just like the barrier to entry in the stock market is extremely low. I mean, with a couple $100, you can open up a broker account and start trading. I mean, you go to school for like what, 12, 14 years to become a doctor. So like it's not it's very simple, but it's not easy to be sustained, be a sustainable business if you don't put the work in to like establish a system that works for you, your personality, and your mindset. But it's very simple. Put the work in.